All right, welcome to the market structure class. And in today's class, we will be discussing, like I said, market structure. And we'll be discussing market structure and how to plot proper market structure. Now, we would also be talking about the different trending phases and how to spot reversals. And lastly, we will be talking about pitfalls and mistakes of market structure and how to avoid them. Without time wasting, let us go straight up to the chart. Now, quickly, I like to say this. There are three directions price can go. So it is either we are in what we call an uptrend, right? What do I mean by that? You're seeing something like this. That should do. Is either we are in an uptrend or we are in a sideways. Let me add this to it so you can have better clarity here. So we're in a what? We are in an excuse me. Okay, so let me add text. Uptrend, very important. It's either we are in an uptrend. Let me here. Uptrend. Or we are in a sideways trend. Sideways, what do I mean by that? I mean we are not seeing any clear movement here. We just see something like this. Price is not clearly showing us much. We just have it like something like moving in a box. Just this goes like this, come here, goes like this. So these are an example of what we call. Now if you look at this keenly, it just seems like price seem to be moving like in a box. I'm going to break this in. So if you look at it, something like this, like it's moving in a sideways direction. So we have the upward, the down. We have, of course, what is it called? The uptrend, which is this here. We have this, which would be usually you can call. We have about different names. People call it different names. You can call it a range. Call it a range. Can call it, some will say it's the accumulation phase. You can call it accumulation, depending on you, whatever you choose to call it. But the most important thing is that you are able to, or some people even say it is they call it the consolidation. Whatever you want to choose, you choose to call it, is perfectly perfect. So we have the uptrend, we have the range, the accumulation side, consolidation. Some people call it sideways trend, depending on whatever you choose to call it. It's beautiful, it's fine. Are we together? And lastly, we have, of course, we have the downtrend, which is this. In this case here, perfect. So we have this. Now, so these are the three phases of price movement. So it's either we are, so we have the uptrend, of course, we have the downtrend, and of course we have the consolidation of the range. Now, it is very important that as traders we are able to tell exactly what is happening whenever we sit on the chart. Personally, I recommend that whenever you want to check market structure, you want to check market structure, also means the direction of the market. You do it on your 4-hour time frame, your daily time frame, your weekly time frame, or your monthly time frame. Does that mean you cannot check it on other lower time frames? Of course you can, but personally, what works from what I've been using that gives me the profit that really works for me, that I just want to check it on 4-hour time frame. So sometimes I do I do the daily. I also do what sometimes when I want to just coming in and out of it, I could use the lower time frame, but specifically for me, for my own trading methodology, I use the 4-hour time frame. So I come to the chart and I want to ask just one question: what is happening on the chart? Is it buying? Is it selling? Or is it ranging? Having said that, I like to add some more flesh to it. Now, how do we know that we are in an uptrend? If we are in an uptrend, we simply will see price printing what we call the higher highs and the higher lows. What do I mean by this? I simply mean that around here you'll be having this formation around. So we'll be having higher highs, and we will be having what? We'll be having higher lows. Higher highs, higher lows. Higher highs, higher. Now, as a rule of thumb, let me quickly say it is very important. Higher lows. So we have higher highs, higher lows. Now, it is very important that we know that for an uptrend to remain valid, the low, this low here must not be broken. The lows must never be, they must never be broken by the pullback. It's okay to pull back, but it should not break it to keep it valid. So here we have, sorry about that. Oh, beautiful. Good. Now we have, this is the impulse, the movement up here, then this is the pullback. Now this pullback here at the top here must not break this. And what do I mean by break? It must not do this. Do you understand? It must stay above the zone, so it has to stay in this manner. The same way, this pullback here must not break this. It must stay above this. And if this is what is happening, then we can boldly tell ourselves that we are in an uptrend now. So in an uptrend where we'll have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, that is a pointer to tell us, oh guys, this is that we should look for opportunities for us to buy in this kind of market. Now the second part, I'm going to jump quickly to the downtrend here, because I always tell my students that for the range, for the sideways movements, stay out of the market. Stay out of the market. It's an indecision phase. A clear path has not been chosen. So stay out of it. Do not allow greed, unnecessary over trading. Just wait it out. Let price show you the cards before you follow through. There's no need to rush. Just wait. If you notice this, that price has been consolidating for a while, don't worry. Just take a back seat. In a matter of time, they will show you the direction. Then you can begin to leverage on that. So for the downtrend, we have for downtrends, what we get to have are called the lower highs and the lower lows. So we are coming from an initial buy position. That's what this means. This leg here. Then we get to have a pullback. So I'm going to quickly label it. You can, if you choose, it's beautiful. If you want to, maybe just want to put it somewhere, it's okay. It keeps you in the game. So here we get to have the what? Okay, hold on a bit. The lower highs and the lower low. Okay, I think. Oh, beautiful. Lower highs are beautiful. So we have the lower highs, and of course below we have the what? We have the lower low right here. I don't know. The lower low. So L, whenever you see the LLLH, lower highs, lower low, lower highs. So if what is being printed is this, if what is being printed is this, we want to continue or stay, so to say, in a sell. We want to look for opportunities for us to sell. So price moves basically in three directions, like I just mentioned. It moves either in an upward trend, like from what I said, it's either price is going upward, is going sideways, or it is going what? It is going down. And our responsibility as traders is to ensure that we find out exactly what is happening in the market, what is price action showing us before we make a decision of what we want to do. You agree with me that if you do not do this, you're trading blindly and you might definitely get liquidated. So it is important you trade, you follow through. Someone usually say the trend is your friend. So it's a true saying. So you do not trade against the direction of the money makers, or the, or so to say, the big sharks. No, you want to trade in line with them. And one of the sure fire way to know the direction which they are, with which they are trading, is by you, is your, lies in your ability to be able to recognize market structure. Now, having said this, let us take all this to the chart and let us put some more flex. It's better said, because it's not that it's not it doesn't always show up this smooth. No, it doesn't. So but with practice on the chart, I guarantee you, you will be able to weather your way around this. So quickly, let's go to the chart. So this is the Australian dollar to the Swiss franc. So, like for example, if you look at what we have here, I like to make it a bit, let me shrink it up, a bit, just to give us perspective here. Now you can see, if you agree with me here, the whole the trend started from here, you know, from here, came here, came down here, then boom, it came down here, boom. Okay, I think I want to choose the, why am I, okay, good, let me quickly say why why have I decided not to take this top here. That's because if you look at this eye here, it did not break. There's no body break. What do I mean by body? The body of the candle did not break above these points, rather it's the wick that broke above it, and we don't want a wick break, we need a body break. So I would go for this next as my eye, since this eye broke this by with the body and it broke this. So I'm going to go for this is my next. I'm going to go for this guy here, and I'm going to come for this guy here, and this is my pullback here. I'm not going to go for this. Why? Because this, it did not break above this point. Rather, I would go for this guy here. Then I will go for this. Then next, I'm going to go for this. You agree with me with what you can see here, that we are in an uptrend. So since we are in an uptrend, what do we need to find? We need to look for opportunities for us to buy. Now let us go, let's check the sell. Now you agree with me from here. If you look at what I'm doing here, if you can see me properly here, you notice if you pick it up from here, what has been happening, we have this happen here, this happen here, we have this downtrend, and you see from here came here, when here, I will see this guy here. Now I'm going to take this. You might want to ask me, why am I not taking this as next? Because why? This did not break low below it, so I'm going to take this guy here, and I'm going to take this guy here. I'm going to bring it back here. I won't take this. Why am I not going to take this? I'm not going to take this because it did not break below here. So I'm going to take this guy here. I'm going to take this guy here. And you know what? And that validates or tells us we are in a what? We are in a downtrend. Now, having done this, I like to say this. Now, it is important that we are able to identify when there is a change in trend. So I'm going to use this as an example. I'm going to use this point as an example. Now, you would agree with me that all through the whole of this place here, you agree with me, it looked like we had how am I going to call it, we did an uptrend somewhere around this space. So if you look at it keenly here, you agree with me that we had something like this here, this here, this, and this. Now the moment this comes here and breaks this low, can you see this low here? This movement broke this low here. So we had a change. I like to call it BOS, the break of structure. The moment we experience a break of structure around here, that this low is broken by this move down. Is broken by this move down here. Then that tells us that we are no longer looking for We have moved from a buy bias to a sell bias. So we want to look for opportunities. So it is important that we can tell exactly when a trend has moved or shifted, either from a buy to a sell. So let me look for other further examples to show you, so you can have a proper understanding of what exactly I am talking about. It is important we can tell, we are able to identify when there is a shift in trend. Very, very, very important. It is very important we can tell when we have a shift in trend. So for example, I'm going to use this also. I'm just going to use this region, as an example, so you can understand me. So I'm going to mark it up from here. If you look at it from here, we came here, we had this, we had this, we had this guy here, we had this one coming here, we had, yes, then we had this, then this came down here, the next thing, boom, look at, boom. Now the moment this eye here, this eye here is broken by this upward movement like this one here, we are no longer in a sell. We have changed, the bias has changed. So it is important that as traders we are able to tell what the market structure is, and what exactly, or when exactly, as a change occurred. Now let me say this, and so because I thought one of the pitfalls quite a number of traders fall into is what I just explained. What do I mean by that? Now quite a lot of traders do not, they just feel that it is any that it is any leg of price action that you can choose as your input. No, that's not the case. You must understand exactly what you are doing. And what do I mean by you must know exactly what you're doing? Now you will notice that for one reason or the other, while I was doing my markups, you find that, for example, while I was doing my markup, if I'm going to pick it up from here, I did this, and I did not choose this. Now, why didn't I choose this? Is it because it's not a valid movement? It is, but the reason I did not choose it as my next eye is simply because it did not break. If you look at the top of this week, it didn't break above this week, the week of this candle here. So that makes it a bit inconsistent for me. Are we together? Though if we turn to the line chart, you would see it. But personally, I'm not gonna take that chance. And even if I will, I'm just gonna put minimal amount of money into it. I wouldn't do much here, because why? It didn't break. But this one, oh goodness, it did. It was a good amount. So if you look at this from here, going up here, yes, there was a good what? There was a good break. It sure did really break it, and that is why when price got into the zone, that means around here, you can see there was a bounce, there was a reaction, it bounced here and it continued this journey. So it is important we take movements that has break of structure. What happened here is what we call a break of structure. What happened here is what we call a break of structure. A big break of structure is very, very important to validate if movement is solid or if it isn't. So it is important we are able to. So that's some of the pitfalls that quite a lot of traders fall into. They are unable to tell, am I just to mark any zone? By zone, I simply mean, am I just to mark any demand or any supply zone? That's going to be in our next class. I'm still going to talk about demand and supply also, but for today our focus is on market structure, the ability to know if price is printing maybe higher highs, higher lows, higher highs, higher lows, or lower highs or lower lows. All right, thank you very much. Till I come your way in the next class, take good care of yourself. Make sure you practice, because they say practice makes perfect. Thank you very much, and God bless you. All right, see ya. Be good.